I'm not going to take a lot of time in the introduction because I know Drew has a lot to cover today and it's some pretty awesome information. We titled this one The Perfect Storm. There is a lot going on right now, but it's also better known as Say Goodbye to $4,000 Gold. What actually happened and why? And the idea here being that there's a whole lot that's happened over the last couple of weeks, and it's priming the pump, guys. It's priming the pump. And Drew's going to get into that and how you can take advantage of it. Um, those of you that know me, 25 years in the financial industry, former investment banker at one of the largest institutions in the world. I'm the founder, owner, and operator of trading education, financial education, trading software companies. And I like to say I'm not only the president, I'm also a client. It's Mikey Z here, guys. And with me, I've got Drew Urasek. Now, Drew is a finance industry professional, 20 plus years in the industry, investment grade metals and analyst for over 10 years, helped thousands safeguard their retirement accounts, chief metals strategist at Gold IQ, managing partner at the Complete Investor, decorated U.S. Marine with 8 years of service. And Drew, I like to say this, you and I talk on a regular basis. You're constantly bringing unique ideas. And I always say, I just want to get this out in front of people. We got to tell people about this. We got to tell people about this. So this is actually one of the most exciting ones I think we've ever done. So much has happened over the last couple of weeks that it's just, we got to get this information out. We got to get people to hear this because there's an opportunity right now to do things that will affect your finances forget about the next decade. This might be the next 2 decades. Bless us if we're all around to take advantage of that. But this is a very opportunistic time. So, Drew, I don't want to take any of your thunder here. I want you to take this ball and run with it. Thank you for being with us, sir.
Yeah, and thank you so much, Michael, for hosting this event. You, Gold IQ Group, and Wealth IQ host the best content, always have the best professionals, the best research. And you're right, Michael. You and I will be texting on a Sunday night when we see something, right? Wednesday night, right? Something happens, something comes across the wire. And, you and I kind of hit a chord when we feel like something's really impactful. We're like, we got to get this information out. I
People
will
have to hear
tell.
about
And by the way, you and I have done webinars 4 times on this price point. 4 webinars. And I'm going to reference those and I'll show you where you can go to those archives later. But this, in my opinion, is the most important webinar you will ever watch about gold. Why do I say that? Because everything that gives gold its value happened in the last 3 weeks. Huge news, and that impacted not only gold for now, gold for the next 20 years, as we mentioned, 10, probably 20 years, which does have an impact on you whether you have gold or you don't have gold. So please pay attention, get something to write with, pen and pad of paper. This will, and again, mark my words, this will be the most impactful and informational session on why gold, why now, and goodbye 4,000. That's my personal opinion. Goodbye 4,000. Okay. So first, let's go over why did gold pull back in the first place. Oh, by the way, you can ask questions. You can type them in the chat. I'll do my best to answer them. We do have a question and answer session at the end of this, and we also will have access to my live calendar. You can click a button and get on my calendar. It's live and up to date. If you want to have a conversation that's personal to you on what's up with gold, what's up with your personal, position on whether you want it, don't want it. Maybe you have gold and want to get rid of it. We're a full service dealer, so I'll go over that too. Now, why did gold do the first pullback to begin with? Right, it was on this nice run. Why did it pull back to begin with? What actually happened since that all-time high? Okay, back in January. Remember the Fed's mandate. Now, why do I bring up the Fed? Because the Fed, just think of the Fed and the US dollar. It's over here. Gold is over here. And because the Fed has such an influence and impact on the dollar, and the dollar is a contra trade to gold, if the dollar weakens, gold goes up and vice versa, right? So the Fed has 2 mandates, and those mandates are basically handcuffing the Fed, and they are, for lack of a better term, screwed. And we're going to prove it here tonight. Okay, with the news that has come out in the last 3 weeks. And then at the end of the day, it's about our national debt. That's what's screwing us. At the end of the day, it's our national debt, our out of control national debt. We just passed $40 trillion. Was it last night or the night before? I can't remember. You and I were texting back and forth,
I think it was
Michael.
last night because we said we're going to bring it up. Yeah.
Yeah. So it was last night. I knew it was coming. Right? It was just a formality when it happened. But again, that's the biggest issue, and we're going to go over that and why. And then the final nail in the coffin showed yesterday. So all of this talk tonight, wait till the last slide because that's the nail in the coffin. The dollar's cooked. Gold's at 4,000 is gone. We are now screaming. Goldman Sachs, by the way, just came out today and upped their numbers for the end of the year for gold. Bank of America still has stayed steady at 6,000 by the end of the year. They swear by that. But Goldman Sachs just increased their price by the end of the year. I think also Chase Bank did, JP Morgan Chase. And then I'll go over how to get gold. All right. Maybe you already have gold, want to add to it. Maybe you want to get out. We're a full service dealer. I'll go over that. But there's two ways to get gold. You can own gold in an IRA. A lot of people don't know. You can actually own real gold inside your retirement account. It's a tax-free, penalty-free move. You lose no value. You're just moving from paper to physical assets. And again, you're going to find out why you might want to do that. Plus, gold, physical precious metals inside your retirement account is not taxed the same as paper assets, not taxed the same as stocks, bonds, mutual funds, CDs, annuities, or even cryptocurrency. And I'm sure everyone on this call, whether you're watching it live or you watch it recorded later, I'm sure everybody rather spend less in taxes than more in taxes. Am I right? Also, you can buy gold direct. Nobody delivers gold faster, safer, more effectively than us. Gold in your hands in 1 to 2 days. And you can buy coins that are deemed non-reportable by the IRS. What does that mean? I'll go over those details, and then we'll have that question and answer. But in the meantime, sit back, relax, get something to write with. We're going to go over a lot. Okay, so this is the chart from the beginning of the year, right? By the way, we were on track to be 100% return in 1 year, like never happened in gold. We're skyrocketing through 2025, going into 2026. Boom, it's January. We hit that $5,400 level intraday. We didn't settle on that price, but we touched it, pulled back, bounced around a little bit. All of a sudden, we get in a war with Iran, and this big drop happens. Now, what people have to understand about this drop, nobody was selling their gold, their physical gold. This is the futures contract on gold, not real gold in people's hands. I have been in gold since 2010, myself personally. I used to trade gold contracts at the Chicago Board of Trade. That's where I learned it, okay? Learning from the best. Got into physical precious metals and helping people protect their retirement accounts since 2016. I've worked for 2 of the top 3 gold dealers in America before starting my own company, and I've helped thousands and thousands of people protect tens and tens of millions of dollars with real physical precious metals. And guess how many customers of mine wanted to sell their gold during this period? 0. Okay. This is the futures contract. And because I traded gold futures, I know how this works. If you have a trade desk and you have gold over here and you can click a button and trade oil over here because the 20% of the world's oil is cut off and you can make a quick buck over here, you move your money over here. That's what traders do. And that's what happened. Now, it was pretty drastic. And yes, it did lower your par value if you did sell gold, right? But no, again, nobody was selling gold. But this was the futures contract, and it did pull back drastically. Now, it tried to bounce. But something happened. The Federal Reserve realized with higher oil prices and higher inflation costs across the board, they're probably going to have to raise interest rates 3 times by the end of the year. You can look it up in April, beginning of April, right after the war started, gold started ticking back up. All of a sudden, the Federal Reserve, Fed Funds Future forecasted 3 rate hikes to a 90+% probability between at this time, April, and the end of the year, there would be at least 3 rate hikes. Well, what did that do? That pushed money out of oil and gold into bond futures. And I did a webinar. By the way, any of these webinars I'm referencing, you can go to my website and see the log of all the webinars we've done on these topics. TheCompleteInvestor.net's my website, or you can search a Gold IQ group on YouTube and see all these videos we did about how the money moved almost one for one as these news items came out, and money moved out of gold futures and moved to bond futures on this news. And again, we had that little pullback, and then it kept on dribbling down, and I'll go over those details before they bounced. Okay, so that's really the biggest pressure on gold, was the war in Iran. Again, 20% pullback, or sorry, 20% of the oil in the world cut off. That's a big deal, right? Also, the Federal Reserve saying, hey, we got to raise rates to control all this inflation that's happening, and we're going to do at least 3 rate hikes between at this time, April and the end of the year. That was a big deal, and that weighed pressure on gold contracts, futures contracts. Also, it didn't help that the AI trade was in full swing. I mean, AI money and the AI trade was in full force. So if you're going to be in the markets, why not be in AI, right? You don't want to be in gold. You want to be in AI where you can make tons of money. You want to be in oil where you can make tons of money. You want to be in bond futures if you want to make tons of money. And that's really the big weight on gold going into, the beginning of the year to the April, May timeframe. Okay. Now, this is where I got to get out my little drawing tool. This is where the switch flipped. Everyone, and this is where you and I, again, Michael, you can attest to this. This is where you and I said you better get into gold at 4,000. How many? What do we do? 4 webinars on 4,000 gold.
We did 3 webinars and 2 info sessions. I just went back and counted them. 3 webinars, 2 info sessions, saying, guys, go, go, go. We kept telling them and telling them and telling them. So
now, listen, there's plenty of time to get in gold with after what I tell you, but we told everybody this $4,000 level might be the last chance. And the reason why, and it started with the July jobs report. We were expecting to get 110,000 jobs, and we only got 57,000. Then fast forward, because again, July 2nd, watch gold. You can look at gold, and I'm going to go back to the chart, and you'll see, boom, gold popped up when we realized we weren't making the jobs we were supposed to make, right? Also, the August jobs, not only negative, they reduced the May through July report to negative 103,000. Do you realize we haven't had this much loss of jobs since the pandemic? And there's no pandemic. Nobody's working. We are losing jobs faster than we have in our modern history, and in a very short period of time. This should scare everybody, and I'll tell you why in a second. But again, July jobs report, August jobs report, you can look at gold, and I'm going to go back to the chart. It popped every time, 2% each of those times those reports came out. Okay? Now, and you know this is not AI because I still haven't fixed my drawing tool popping me out of my presentation when I use it. Okay, so let's remember, and why jobs is so important, because the Federal Reserve has 2 mandates. Number 1 is price stability. You always hear about price stability, right? And what does that mean? They want to keep inflation in check. They don't want inflation too high. They want it at 2%. So you'll hear that, right? Price stability, price stability, price stability. And they want to make sure inflation is not too hot. Now, what's their control mechanism for making sure that inflation is not too hot? Raising interest rates, shutting down the money supply, giving people less access to funds so they can't keep on spending like crazy, businesses and people, right? So that's their only mechanism that allows them, well, their major, and some will say only mechanism for allowing control of high inflation. Keep this in mind, because their second mandate is job growth, right? Not only growth, but full employment and job growth, meaning not only full employment, but the like growing of jobs, like people, companies saying, hey, I'm going to add jobs, right? Because companies will announce, hey, I'm going to add jobs. So they need both those things to really happen, because if you just stay the same with technology, we'll always lose jobs. So not only do you have to have full employment, you have to keep on adding jobs, okay? With these jobs reports, they are missing on this one. Now, this is huge because they can't raise rates into this much job loss. Why? Because if you cut off money supply to companies and people, we can't hire anybody, right? If money costs too much, if a company's business expenses and cost of money increase, they can't keep on hiring people. Well, that's where we get all our taxes. And if you know this, every president that loses jobs gets fired, and fired badly. Okay, so you can't have job loss. So immediately, by the way, these jobs reports, you see gold jump up, but then even more important, and I'm going to go back to this in a second, look what happened during the CPI report in July and the CPI report in August. This is where the government looks at inflation. And all of a sudden, the CPI reports look better than expected. Now, I think this is completely fake. I think they fake their numbers because they know they cannot raise rates into this terrible job situation. So they have to justify keeping rates the same or lowering them. Oh, and you can look at the Fed funds future went from 90% in April to just 30% yesterday. So not only are we not going to raise rates 3 times, we might not do any rate hikes between now and the end of the year. Keep this in mind because this is going to be very important. If the Fed can't raise rates to control inflation, ... to be continued. So at the end of the day, it's about our debt. We just hit $40 trillion in debt. So all of these, again, I'm so passionate about gold to begin with. I think everyone should have gold. But the reasons why you should have gold all happen in the last 3 weeks. Our out of control spending, and you can see in the upper right hand corner, let me circle it, we just hit $40 trillion in debt. And remember this, gold, since we came off the gold standard, always stays ahead of our debt. Remember this, gold always stays ahead of our debt. It's the only real money, the only real asset. That's why central banks own gold. They don't own other assets, right? They own gold in a majority. They own gold. And as a matter of fact, last year,
This is a snowball effect. I mean, you've just got all these indicators all saying the same thing.
Well, and that's why gold just jumped from July 2nd, and we're going to go back to the chart, to yesterday, when we just went over $40 trillion in debt, gold jumped over $500 an ounce in 3 weeks. An asset doesn't act like this unless, especially gold, which is a very conservative asset, gold doesn't move like this unless a lot of stuff is broken. It just doesn't. Gold is a slow boat, reliable, right? 5,000 years old, right? Hedge against inflation, conservative asset. Gold jumping like this, everybody, in my opinion, should be very, very aware of their personal financial situation and have protections in place for what I feel will be coming up the most inflation we've experienced in modern history in a very short period of time. And you don't have to listen to me. There are analysts saying this, by the way, I got into golden IRAs right here. We were just at $20 trillion in debt. We doubled our debt. It was 19 trillion to be exact when I got into gold. We more than doubled our debt in less than 10 years. Okay? Analysts are saying by 2030, it's probably going to double again because the accelerant factor, right? The exponential increase of not only the servicing of this debt, but the amount of money we're spending as a country, right? By the way, we just passed $1.3 trillion just on debt service. Okay. Now, nail in the coffin, and why I think everybody, if you don't have gold, you should take a serious look at it. And by the way, do your own research on everything I just went over. Reuters has all of the Fed fund futures. You can watch it go from 90% down to 30% yesterday. Reuters covered all that news. You can go to usdebtclock.org, which gets all of this information directly from Congressional Budget Office. So jobs reports, right? You can just look up jobs reports, right? Those are all published online. So everything I'm going over here, and again, look at what happened to gold just in the last 3 weeks. $500 an ounce, over $500 an ounce. All right, now, and again, my apologies. You know this is not AI. This is me, real me. Okay, this is the nail in the coffin. I swear. All of a sudden, Scott Bessent, our Treasury Secretary, says we're going to buy long-term treasuries to control the long-term rate, 20 and 30-year bonds. Why would he have to do that? Does everyone remember what happened just a month ago, less than a month ago? We had to bail out Japan and their failing currency. Why? Because they, the number one buyer of our 30-year bonds, was about to sell their bonds. We stepped in, bought their yen, by the way, using euros. So England or Europe was mad at us, by the way, for doing that. So we stepped in, bought their yen so that they wouldn't collapse. Because if it did collapse, they were going to sell their 30-year bonds, the U.S. Treasuries they bought, and put them on the open market, which would have skyrocketed the long-term rate. All right, that's why we stepped in. We need to control that rate. So all of a sudden we did that, and then yen dropped again because it's a short-term band-aid. So all of a sudden we had to step in again because we know they're probably going to have to sell their treasuries, and nobody wants to buy our 30-year treasuries. Who wants to buy debt from a broke country that's probably on the brink of bankruptcy? Okay, that's why we're doing it. Oh, so I love that you did this because you made this nice and big. Let's get some class participation. So they're going to step in and double the bond buying. Oh, and by the way, this is not quantitative easing. Yeah, it is. But anyway, they're saying, no, it's not. Yes, it is. But $4 billion. So who thinks this is $4 billion in 1 year added spending on bonds? Who thinks this is $4 billion once a quarter? Who thinks this is $4 billion a month? This is $36 billion a quarter. Why? Because it's $4 billion a cycle. There's 4 cycles a quarter, and there's the 20-year bond they're buying and the 30-year. This is a minimum of $36 billion a quarter additional spending. And Michael, go back to my website, thecompleteinvestor.net. Look at our webinar history. We did a webinar on this last year, or go look up Gold IQ Group on YouTube. And look, last year, when they increased buying of our long-term bonds at the end of the year last year, I think it was the first webinar you and I did at the end of the year last year, Michael, I said they're probably going to have to buy more because no one wants to buy our treasuries. Nobody. Our debt, nobody wants. So this addition not only is more than that add-on what we did at the end of last year, this is nothing. We're probably going to have to double this again by the end of this year. And again, this is not $4 billion a month. This is $36 billion a quarter minimum. And why is this the nail in the coffin? Because it's going to accelerate our debt. Gold goes up with our debt. Let's go back there. Let's go back. Let's just look at debt. No, this does not lie. Gold goes up with our debt. It stays ahead of our debt. And there are analysts saying we're probably going to be at up to $100 trillion in debt, $70 to $100 trillion in debt by 2030. That's 3.5 years. So if gold goes up with our debt, and we more than double our debt by 2030, shouldn't gold more than double by 2030? And that's why Ed Yardini is saying 10,000 an ounce by 2030. That's why Goldman Sachs, JP Morgan Chase,
Drew,
Bank of
Drew,
America.
say that one more time because you can't say that enough times. It's so imperative. Gold goes up with the debt. It actually outpaces the debt. And if our debt is going to go to 100 T,
2x. Let's just say 2x. Let's just say 70 to 80 trillion on the low end.
then what should gold do?
Should double.
Exactly. That is the you say the nail in the coffin. That's the proof in the pudding, baby. That's why you got to go do it. Right there.
Now there's here. So again, look at here's just I gotta get my drawing tool out again. So remember the July 2nd jobs report? Look at jobs gold spike. The August jobs report, right? Gold spikes. Here, and this doesn't do it justice because I got the whole year here, but this is the news right here. And look at that volume spike. This is the news one day yesterday that we're buying our treasuries. Gold jumps 3% in one day. That's unheard of. And look at the volume. If I had a 1 day chart up, this would be just a straight up hockey stick. But I got the whole year here. That's why it's kind of muted. Okay. So we jump on the bad jobs report. We jump 2% each day on those bad jobs numbers. Okay. The CPI numbers where the CPI magically looks great. So inflation's in check, which it's not. I think they're lying about those numbers. Gold jumped 1% each of those days. And then yesterday we say, hey, we're buying bonds because nobody's going to, and by the way, no one's going to say this, but we're buying bonds. It's quantitative easing. Oh, but it's not quantitative easing. They say that, right? This is normal business practice, right? Well, if it's normal business practice, then why did gold just jump 3% in one day? Because we're screwed. We are absolutely screwed. We're about to enter, and this is, again, you do your own homework on everything I went over tonight. We are about to hit the most hyperinflation period of our lifetimes. I mean, the dollar is going to tank. It's going to be worth nothing. I say protect yourself. Get at least something into gold, physical precious metals. Because if you don't have gold, you don't have anything else. You have a derivative of the dollar. Because the stocks are dollar backed, right? Bonds are dollar backed. Mutual funds are dollar backed, right? So you got to get into a physical asset, in my opinion, that's detached away from our debt. Gold has nothing to do with our debt. Oh, by the way, in your retirement account, not taxed the same, right? Not taxed the same as your paper assets. Again, another benefit. And if you're buying with cash, you can own coins that nobody has to know you have. They're deemed non-reportable by the IRS. Now, there's two ways to get into gold. And again, my apologies. This is the last time I used my drawing tool, so we won't get kicked out of our slideshow again. So there's two ways to get gold. The very first way is direct delivery. So you take any cash you have, you get into gold. Nobody delivers gold faster, safer, more effectively than us. Gold in your hands in 1 to 2 days, fully insured. I don't know anyone else that does that. Not only can we get gold in your hands faster than anybody else, you can buy coins that are deemed non-reportable by the IRS. What does that mean? There's actually a 1099B guideline called non-reportable coins. This is an IRS guideline where if you buy these specific coins, not only do you not have to tell anybody you have them while you own them, I, as a dealer, U.S. dealer, I don't have to tell anybody you bought them from me. It is the last safe haven, in my opinion, of privacy and anonymity. Because everybody knows everything you have nowadays. Everything digitally held and digitally recorded, everyone knows you have. So it's nice to have some of your investment in a truly private holding. And again, non-reportable coins. I can go over that detail with you one-on-one. I'll put up my calendar again in a second. And then you can own gold in your retirement account. Now, this is huge. You can take any money that you have in a qualifying 401k or IRA and tax-free, penalty-free, move it into gold. You lose no value. You're just moving from paper assets to physical assets. If you have 100 grand in one account one day, it's 100 grand in your gold account the next day. And again, physical precious metals in your retirement accounts, not taxed the same. It's not taxed the same as stocks, bonds, mutual funds, CDs, annuities, even cryptocurrency. And again, I said this at the very beginning of this webinar. I am sure everybody on this call rather spend less in taxes than more in taxes in retirement. Now, again, I'll take this time to answer any questions anyone has. We'll put my calendar up again. I think it's up there right now in the chat.
Your calendar's in the chat.
So if you have any questions, Michael, like I said, you can search any of the webinars we did because we did go over 3 webinars. You can look up on YouTube Gold IQ Group and see any of the webinars we did on this, all these topics. You can also go to my website. I have a catalog of the webinars on my site, thecompleteinvestor.net, and watch any of the videos that we talked about here. You can do all your research on everything we talked about tonight. You know, again, the jobs reports, those are all searchable, right? The Fed funds futures going from 90%, almost 90% in April to 30% last night. Reuters reported on it, but there's other companies that reported on that. The usdebtclock.org, you can go to that site. They get all their information from CBO, Congressional Budget Office. Looking at our national debt, you can easily look up gold prices. I just overlaid gold 1971 when we came off the gold standard to yesterday, and that's how we made that chart, right? And then Michael, you did a beautiful job putting all those kind of like benchmark years and stuff that happened. But also, you can look this up. We went from $19 trillion to $40 trillion in less than 10 years. The next doubling, they're saying, is going to be half that time, which makes sense. And I don't know where else you can go, Michael. Buy something that doubles in value in less than 4 years. Okay. And I'm talking about gold based on our debt. That's not hackable. I didn't even talk about cybersecurity threats. You can look up all our videos on cybersecurity threats too. Go to thecompleteinvestor.net, see my webinars or Gold IQ Group on YouTube, and see our webinars we've done on cybersecurity. You can't hack a physical gold coin. And cybersecurity threats aren't going down. They're only increasing. How many cybersecurity attacks did the AIs do just in the last couple of weeks? Right?
There's actually been such a quick uptick. There were 2 announcements to the major banks and financial institutions. The SEC actually put out a security notification for the uptick. It just happened in the last week and a half.
Yeah. So and it's only getting. And by the way, Palo Alto warned everybody that between now and the end of the year, and this is going back in July when they made this announcement, they said in the next 3 to 4 months.
We did a webinar on it.
Yeah, I had a guy write to me that he just watched it yesterday, so it's definitely online. And they warned that the cybersecurity attacks are going to increase in frequency, especially in the next 3 to 4 months, as AI basically becomes uncontainable. And look what happened just in the last. And you can't hack a physical gold coin, so it's again nice to have a physical asset that isn't susceptible to the same cybersecurity threats as digitally held assets, right?
It's also insured. It's also 100% insured, which you don't have on your SIPC. Everybody thinks SIPC is insurance for their securities. It's only insurance against the brokerage. It's not insurance against the security itself. So you do have that with gold.
Yeah, if you're getting gold in your IRA, Michael, great point. If you're getting gold in your IRA, again, tax-free, penalty-free move. People don't realize real gold in your IRA is 100% insured. The investments you have in your IRA have zero insurance. And I always get people with this, except for people that are in the business, right? Why? And you can look at the bottom of any statement page. These investments have no insurance. They can lose 100% of the value. Why do you think? Does anyone want to? Do we still have a few people on? Why do you think that investments you have in your IRA have no insurance? No stock, no bond, no mutual fund. Why do they have no insurance? And at the bottom of every statement page, they say these words: these investments have no insurance. Why? Anyone want to guess? I get it. I get people on this one all the time. Because you don't own it. You don't own those investments. You have beneficial interest. You get the benefit if it goes up. Not really a benefit, but the benefit if it goes down. But you don't actually own the investment. Well, they can't insure something you don't own. That's why there's no insurance on the individual investments in your retirement account or your brokerage account, for that matter. Physical gold you own in your retirement account. It's 100% insured because of that reason. And that's why they can get 100% all risk coverage, is because you actually own the physical asset. Huge deal, in my opinion. Huge.
Drew, I think so just a couple of things, guys, to essentially wrap this up. First of all, there'll be an email coming out that follows this up. It's going to come out from Bubba. It's going to come out from Wealth IQ Group. It'll come out from Gold IQ Groups. The different groups have the different emails. And here's the thing. I'm going to include some of the links in there for some of the other webinars.
Oh, cool. Yeah.
Well.
Yeah.
And then as well as this one, and I'm also going to include the scheduling link for Drew. For those of you that have attended our webinars in the past, I say this at the end of every single one, and I don't know why people don't take advantage of this. Drew is available to speak with about this one-on-one. He can talk with you about your personal situation. He can help you strategize how to take where you are and get to where you want to get to. Guys,
all my conversations. And by the way, you can, and Michael, you said something important in my opinion. If you look my name up, and you can see it's my name spelled out in the webinar, Drew Urasek Gold, in any search engine. I only have 5-star reviews. Now, why do I only have 5-star reviews? In my opinion, I think I only have 5-star reviews for my clients because I educate first. I never push anyone into any decision they don't want to do. As a matter of fact, I turn more people away from gold than into gold. I talk to 100, 150 people a month. I would bet that I tell more people than not, hey, gold's probably not right for you. So I never push anyone into anything they don't want to do. But number two is I always support you in your decision, whatever it is. Okay, I support you. And then number three is I make myself available. My clients not only can get a hold of me through regular channels, right? They have my cell phone number. You could literally call me day or night. And again, we're a full service dealer. If you ever want to liquidate, we pay top dollar, can usually cash you out same day, no discounts, no penalties, no fees. So because of those reasons, I only have 5-star reviews from my clients. So if you want to meet with me, it's going to be no obligation. I'm not going to push you into anything. I'll just be a resource for you, answer any question you have. So please take advantage of that. Again, in the chat is my calendar link. Michael, you're going to send that in an email as well with my calendar link, plus a couple of the videos we have, which you can search online. They're available. We've been doing this again, all the videos on $4,000 level, all the videos on Palo Alto's warning of cybersecurity threats. So you can find all that information online, but we'll include some of those in the email as well. And I do thank you for that, Michael.
Yeah, awesome job, Drew. And guys, go back and rewatch this if you didn't catch everything on the review of it, on the replay, I mean, of it. But there is just this conglomeration of indicators, and what's scary is they're all saying the same damn thing. You don't get this very often, and when you do get it, it's time to move. We called this the perfect storm, but the real thing is this is going to be your last shot at $4,000 gold. That's really what this should just be titled. And we've been saying that to you.
Oh, that's gone. I mean, I think it went up another $20 after hours here. I think it's like 4,600 right now.
So it might be gone. It might be gone, but the chances of it, you understand the math. The chances of it, doubling, the chances of it tripling are there. So this is an opportunity to get in, to protect yourself, to take a very advantageous move, and we can't encourage you enough to do it. So Drew, as always, just an awesome job. I appreciate your insight. I appreciate your knowledge and your research. Thank you so much for spending the time with everybody.
Thank you, guys. Thanks, Michael. Have a great night, everyone.
Have a great night, guys.